Give us a sense of your thoughts on this mini relief rally, I guess we can call it. The major averages moving higher over the last couple of days. But again, as we just noted, having a difficult month of August.
Yeah, it's been a difficult month. Good morning again. Yeah, I think, we're in earnings season, and earnings season has been, certainly lackluster on the growth front. Very, very meager revenue growth and some contraction in earnings. I think more than anything, it's news out of, China as it relates to residential real estate and just, further softening, globally. And I think it points to the idea that, yeah, as you mentioned, we're at the end of a rate hike cycle. The next time the market really prices in any action by the Fed is really not until next summer, around June, where there could potentially be a cut. And until then, it's just kind of treading water. There's really no conviction in the Fed doing too much of anything until then. So I think that the market likes that, apparently.
All right. So what about you? Where do you have conviction? Because certainly we are seeing some parts of the market working.
Yeah, well, I think the conviction, certainly overall in the market. I mean, I think that the headline kind of PE on, on a forward basis for the S&P is about 20, and that may not be so compelling. Although, versus the Nasdaq at 35, I think that the market is not terribly frothy. I think of particular note would be mid caps that trade at less than 15 times. So I think that we're taking a close look at those and feel like there's opportunity there. They've lagged the market by a good amount this year.
All right, I want to go back to Chinese property stocks. I know that's something that you're watching. Give us a sense of your take on the action. I also want to bounce something else off you. A Fundstrat note from last night. Fundstrat saying in part about yesterday's rally that the rally is proving to be quite strong in many categories, and finally some evidence of some bottoming out in China and metals, but can't rule out a stalling out over the next 2 to 3 days, specifically because of yields. If non-payroll farm payrolls confirm JOLTS data and the TNX, that's the 10-year, crashes under 4%, then it's likely the rally extends. So is a lot of this China property stocks hitting the bottom and finally showing some relief, and these yields continuing to fall? In your mind, does that set us up for a rally going forward into September, which is traditionally a pretty difficult month?
Yeah, I think that's right. I mean, I would agree. I think that the 10-year sits a little bit below where it was about a year ago. And so, we still have an inverted yield curve. We've seen what the news out of China as it relates to real estate has done to things like, the price of crude, taking it below 80 of late. And I think a lot of that is credited to the idea of some contagion coming out of China. I mean, about a third of the US dollar bonds related to residential development are in default. So, that certainly not good for their economy, and there are knock-on effects to the U.S. and elsewhere. And certainly we in this country on the commercial side of the real estate equation, we'll see some weakness at some point, or more weakness as, commercial real estate continues to, come in here in the U.S. as, urban areas are troubled. So, yeah, I think that all this is related to kind of interest rates and how it, sets up for the future. So absolutely. I think that note is spot on.